currently short gold, but if you look at my charts, I am currently looking at XAG USD silver. I'm waiting on silver for a potential short here, as it is trading similar to gold but a bit differently this morning. So you can see here on the 1 hour chart, gold has delivered to the buy side today and is now returning to the sell side. I took a short, but this short was an error during the London session as I missed the long signal. I'll walk you through what I traded here on the 15-minute. So here on the 15-minute, I got caught looking too far to the left. I was looking at this bearish fair value gap here. Here at the open of my kill zone, which is where this white line is here. What I missed was this bullish fair value gap right here. And if I move this timeline, you'll see price action here traded into this gap. This would have been my trade right here, but again I got caught looking left here and went short instead of going long, and then I took an entry here and then stopped out here instead of taking an entry down here and taking profit up here. So this was my first loss today. And now here standing by for a potential short trade. I'll walk you through here on the 15-minute. This is what I took this is what I'm taking this trade based off of. So here you can see in my trade window, you can't see because of this timeline, so I'll move this timeline here. So we get price trade up into, did it trade in there down? No, back up here. In this candle here, price trades up into this bearish fair value gap or sell side imbalance, buy side inefficiency right here, and then price delivers to the sell side after trading into that fair value gap. Then here on the 1 minute chart, you can see price here delivers to the sell side. This is after that price action, and then price puts in these two bearish fair value gaps on the way down. Put in some gaps here, but I'm not interested in these because these fair value gaps here are in an area of discount, so I would only be looking to buy if I was trading off of anything down here. This is equilibrium, this 50%. So discount, and anything above this equilibrium here is going to be premium. So to sell, I want to sell at a premium and cover at a discount, and to buy, I want to buy at a discount and take my position off up here in an area of premium. So again, since I'm looking for a sell, I want to be in an area of premium and take this trade from this fair value gap, and if all goes well, deliver it here to the sell side. But waiting currently on a potential sell position here on silver. Then if we come over to gold, my second loss came on gold today. Missed the same signal as I did on silver. So here you got buy side delivery here coming in here on the 1 hour. So buy side delivery here for the day. Price action started off with a sell to buy here. And now price consolidating here, up here near the buy. We come over here to the 15-minute. I'll walk you through the loss that I took on gold this morning. Just as I mentioned before, there is this here on the 15-minute chart. And this is the London kill zone execution, where there's this bullish gap. Price trades down into it. So here's my trade right here, and then a take profit up here, but I got caught looking to the left at this bullish fair value gap, this bearish fair value gap here, took a short, and then I'm stopped out here. So literally the opposite of what I would have wanted to do, but I got caught not paying attention to the most recent fair value gap that printed. And now I'll walk you over to my short trade currently. So here on gold, here on the 15-minute, you get price trading into this bearish fair value gap, or this sell side imbalance, buy side inefficiency. When price does that on the 15-minute, here on the 1-minute, this is price trading into the gap, and then price delivering to the sell side, putting in a fair value gap here, and then price redelivers to the buy side. I take an entry here with my stop above the 15-minute swing high. And as you can see, price has, actually probably a little easier to see here on the 15-minute, price has consolidated, done some buy side, and is now consolidating here near my entry. You can see the more extreme difference in price action here on the 1-minute. And I currently I don't think I have my take profit in, so I'm going to put it in now. It's calculated. Entry 47.18.29. Okay. Stop loss here is 48.12.54. See a 2-to-1. So 96.06. Perfect. Okay, I'm going to need to refresh my platform here as I'm not able to get into my order. And refresh it one more time because it's gone back to silver instead of gold here, and it's not updated. Okay, we're back. There we go. Looks like I already had one in. 45.29.75 is what I had in there. But This is 45.29.50. Just gonna leave my first one in and not meddle with it. That's good. I have my take profit in. And then there's one more position from today that's already been closed out. So I had a position in Forex in USD JPY, but it's already in the books here. We'll come up here on the 1 hour chart. You can see here on the dollar yen today there's consolidation here, and then get some buy side delivery coming in here in between the London kill zone and the New York AM kill zone. And then that error on gold and silver this morning here on the 15 had me much better prepared for this trade. So you can see this bullish fair value gap here setting up right at the open of my kill zone, and then I take the entry as price pulls back into the kill zone and shows some buy side delivery. And then if we come here on the 1 minute chart, you can see this buy side delivery, and then there's a fair value gap that's put in here. I'll zoom in a little closer so you can see it. Here, there's another fair value gap that's here, but it's out of position or it's offsides for me. But this is what the trade is based off of here. You get this limit entry at 155.284 as price pulls back into that gap. My stop loss is based on the 15 minute, the swing low here. On the 15 minute, my stop loss is here, and going for a 2-to-1 reward to risk ratio. And you can see price consolidates here, and then get some buy side delivery with speed, and then I'm able to take profit up here at a little better than 2-to-1. I had not set my profit taking yet, and then was able to get I think a little better than a 2-to-1. I think profit taking would have probably been around about here. And you can see price action pull back, consolidated, and has redelivered to the buy side, and it's now showing some sell side delivery, but I'm content with 2-to-1 on that position, as I had lost 2 trades earlier with gold and silver. Being able to get back on the board and be able to use my risk management procedures in order to get back to break even after 2 losses. Speaking of which, I'll come over to my trading history now. You can see my history for today. So here, this is the here. All of this area here, this is the London session here. So with London, so this is the, these are the losses on silver and gold here. And then this is my current position on gold, but I entered the position offside. I had some FOMO, so I took a position, but I realized I was offside. I took a second position, realized again I was offside, and then took this third position here. And actually, no, correction. The positions were taken here. These are the 2 positions here that I exited here, and then this is the actual position that I'm in. And I lost $1 on these FOMOs here, but I'm fine with that because I don't want to be over leveraged. So that was an important thing for me, making sure that even though I was offsides, that I, on my entry, that I exited the position, even if it was at a small loss, just not to be caught offside. And then as you saw that price action, went to the buy side pretty aggressively. So if I was in that position with double size or triple size, that would have been very, very, very uncomfortable. But you can see the math here, and then you get this one trade here. So almost back to break even with these positions here. This is about a minus $12 loss here. And then with this trade, this is almost a plus $11 profit. So slightly negative here by about $1. And then if you look at unrealized here, still having one position on and the potential for another position. But if this position that is on here currently in gold were to go to take profit, then I would definitely be up in profits for today. And you can see silver here is still consolidating here on the 1 minute down in this area of discount as a PD array, or as a in the PD array as far as when it comes to locations. And then I'll head back over to gold. Actually, let me head back over to silver. It looks like there's a fair value gap on the 15-minute that's been put in, and I want to highlight it here. So here's a newly printed bearish fair value gap. So I'll keep an eye on this and see if price action wants to trade into it. But it looks like silver will not be pulling back any further than what it already has. And it looks like sell side delivery is starting to come in. But I'm going to keep tracking it with the Fibonacci here just in case anything changes. But I don't believe I'm going to get a short entry here on silver during the kill zone execution period. So this may be an opportunity for another day here in silver after missing this morning's opportunity. But a lesson well learned. And we'll see what silver wants to do. So these changes in price action doesn't change my intentions for an entry or anything, just because the price action hasn't given me anything that I can make a change based off of. There's no lower fair value gap in an area of premium to take this position. So I'm just going to stand by and see if price pulls back that aggressively, but I would doubt it with the amount of time left in 30 minutes left in the session here. So I'm going to head back over to gold, and I'll go back and cancel that order later. And we can see gold here delivering to the sell side. So starting to get some separation from my entry to the current price action. Also, there is an order block here on the 15-minute now. Here. No, that's actually correct. Here. So here is the 15-minute order block. So I would not anticipate price being able to return any higher than this candle until whatever liquidity to the sell side that the algorithm is seeking is rated. So I'm just going to hold this position, single entry, single exit, so all or nothing, or a win or a loss. And we'll see if we can identify profit target. So profit target is actually going to profit target is actually this swing low that the mistrade from this morning This would have been my stop loss from the missed trade of this morning. So this is just price returning and sweeping out the sell side liquidity from anyone who went long during the London session. So that is the liquidity that I'm currently targeting. I'll hop back over to silver. And silver showing a bit of buy side delivery here. I'm going to move my Fibonacci down. Head back over to gold. Okay, I can see why price delivered so aggressively to the buy side there, because this is offside. This fair value gap here is offside. It would have been unlikely that I would have entered this position had I lined this trade up, but just going purely based off of the fair value gap, I took this trade, which now reevaluating it may have been the appropriate choice. So we'll see as this trade plays out. I may have to reevaluate my entry criteria, but ideally this is a position that I would have steered away from, just because the location of the fair value gap is less than desirable, but the entry timing was very desirable. So from my understanding of algorithmic trading, time is the most important factor than price. So I entered based on time and price, but my idea of price may be in error if this is offside, or if the trade failed. I would have a better understanding of why, just because let's say, as I was just mentioning, talking about premium and discount, wanting to sell from everywhere up here, so this being premium, so this is the area I would want to sell from, where this bullish gap is low in the range here in an area of discount. So this is actually an area where I would want to buy, but everything in this area here is a sell signal. So I have the start of my kill zone execution period here, and then this bearish fair value gap here. So I'm getting the two things that I primarily want to see happening together. The only thing that I'm not seeing that I want to see is this fair value gap happening up here in an area of premium. But this is me jumping into a position as I had this morning. So this may be FOMO, or this may be me trading into a situation that may be an exception to the rule, or maybe my concept of how I wanted to approach this rule-based system is in error. So I'm going to learn from this position, and right now I'm just going to leave it on, but I am considering just taking it off, just because I normally would not have taken this position. Also, I know that since I lost a trade on this position, or I lost a trade on gold earlier, that psychologically revenge would be logical, but I want to reevaluate anyway, but I'm going to prepare to close this position if I see anything that I don't like going forward, now that I've realized that this position is not ideal for my system. So I'm considering moving my stop to break even or just completely exiting right now. And depending on what I see from price action, I'll just make a decision. Okay, I'm going to move my stop to break even here. And then I may even exit on top of that. Right now, price trading into this bearish fair value gap on the 1 minute. See if it sends price lower or if price wants to disrespect it. So if there's a body candle close above this level, I'm going to exit. Again, stop is now at break even. I'm going to head back over to silver. Silver, on the other hand, does look to have set up properly here based on my trade entry criteria. I'm going to double check. Yeah, so silver actually checks out. So silver is good to go. You can see here this fair value gap, this bearish fair value gap is above equilibrium, so it's in an area of premium. So this looks good. Gold, on the other hand, does not. But sometimes things still work out for you even though they're not set up as planned. But if silver here in the next 20 minutes trades into this bearish gap and then delivers to the sell side again and sets up here on the 1 minute, I would take it, but I am seriously doubtful of that type of price action with that much time remaining here in the kill zone. So likely I will be canceling this limit order, as I don't believe price is going to make it back into this area of premium before the end of the kill zone, but it could. So I'm just going to let that marinate, head back over to gold here. And keep a real close eye on gold here. So I'm trying to give it an opportunity to work since I'm already in it, and since my stop is at break even, I've already survived quite the price swing here, which could have easily gone and swept out this buy side liquidity, which is where my stop is resting here. But this bearish fair value gap in an area of discount is holding. And then price also traded into this volume imbalance. So there is a volume imbalance here on the 1 hour and on the 15 minute. That may be enough to keep that bearish fair value gap in that area of discount. This may be supporting that price action. So if you look at the low of the body of this candle on the 1 hour chart, and you look at the high of the body of this candle here, there's a gap there, and that gap is a volume imbalance, and you can see price action here traded into that volume imbalance here, and then price has delivered here to the sell side. Then if we come here to the 15-minute, you can see there's the body of this candle here, the low, and then there's the high of the body of this candle, and then you have this potential imbalance area here, which is where I took the entry, or took the entry here, but price trades into it here, and then price delivers to the sell side. So these volume imbalance areas in price action may be supporting this bearish fair value gap or sell side imbalance, buy side inefficiency that is offsides in an area of discount based off of my trading system. And we've got price delivering further to the sell side, consolidating here around the 46.75 level. So no matter what, I will not lose money on this trade, which is fortunate since it was a bit more probable than not that I would, based on how I analyze price action. So making some errors this morning that led to losses, and making an error later in the morning that could lead to profit taking. So interesting to see that silver set up appropriately but never provided an entry, and gold did not set up for me ideally, or did not set up for me at all based on the higher time frame, and price is actually delivering, or provided an entry and is delivering. So maybe these pairs are a bit weaker than they appear, and are just looking for a reason to deliver to the sell side after London's buy side delivery this morning, or earlier in the morning. But price could definitely turn around and redeliver here to the buy side, but we'll see what price action wants to do here. If we look on the 1 hour chart, you can see price is currently trading into this bullish fair value gap right here. So we'll see how price wants to react, or if it reacts from this level. So the fair value gap is going to be at 46.57.30, and the low here is 46.48.32. So price has yet to trade into this bullish fair value gap on the daily chart. When it does, then we'll see if price wants to react and deliver to the buy side, or if price disrespects the fair value gap and closes below it. Then there would be the higher probability that price would continue delivery to the sell side. But this 1 hour candle here will provide some additional information once this candle closes, which would be in about 12 minutes or so. And seeing further sell side delivery here, and you now have price trading in the bullish fair value gap, and price showing further sell side delivery. So price may want to close within, which the fair value gap is quite small, so it would be quite a precision close inside the gap, or price could trade below the gap, disrespect it. Price could pull back and respect the gap and close above it. So these are the three options of what price action can do trading into this bullish fair value gap, and then whatever it does will provide more information for what would be logical to anticipate going forward in price action. Ideally for this position, I'd want to see continued sell side delivery and an hourly body candle close below the bullish fair value gap. And that would indicate the higher probability of price delivering to the sell side as opposed to the buy side, which currently being in a short, I would want to see continuation in that direction to reach take profit. So I'm certainly biased, but the candle will not be biased. The candle will show whatever the price action is doing or has done. Once it's printed, this has been done. So seeing price consolidate here right around this bullish fair value gap. So we'll get an idea of which of the three body candle closure types that gold could display here as the hourly candle approaches 10 minutes to close. Price currently trading 46.50 on gold. Seeing some sell side delivery coming in with speed here. Seeing some volatility. Head back to silver, considering canceling that order right now. As I don't anticipate price being able to get back. I'm more certain about that now. And my silver order is canceled. Price still trading and consolidating around the 46.50 level here on gold. Price potentially looking to put in a new 15-minute low, as in this candle, a new 30-minute low has been put in. As we come to the 1 hour chart, you can see the previous two hourly candles have been, price has traded below them. So this would be a new 2 hour low. My apologies, saying 30-minute low. This would be a new 2 hour low here on gold. And further sell side delivery, price trading at 46.40, 46.36, 46.32. Seeing sell side delivery with speed here. A little less than 6 minutes left in the kill zone. Seeing sell side delivery here on gold, 46.36, 46.40. Price trading below the bullish fair value gap currently. Price at 46.42, 5 minutes remaining in the kill zone. Both 1 hour and 15-minute swing lows are being traded below, and a potential body candle closed below. Also a potential inverse fair value gap on the 1 hour. It would be the second inverse fair value gap on the 1 hour in this price leg if price closes as is. So you get this candle here closing below this bullish fair value gap, creating an inverse fair value gap or an IFBG. And now you're getting this price action here where there's this bullish fair value gap and this bearish candle, which could potentially put in a inverse fair value gap here. A little over 3 minutes remaining, and we'll find out what price action wants to do here for the close of this 1 hour and 15 minute candles. Price consolidating here around the 46.38 level. Seeing a return to sell side delivery, 46.34. And further sell side delivery, 46.31, 46.30, 46.27, 46.22. Price pulling back here after delivering to the sell side with speed. So it looks like price is looking to create another inverse fair value gap here. Price consolidating here, 46.32. $46.28. And 1 minute remaining in the kill zone. Price at 46.19. Still consolidating. And that is it for the New York AM kill zone for today. And there is a, what would this be? Let's zoom out here on the, okay. So there is a break of structure here. As price looks to be continuing here to the sell side. So a break of structure here to the sell side on the 1 hour chart. And then on the 15-minute chart, you can see this level, and this level. So 3 levels here of market structure shift here on the 15-minute. As the 1 hour is still bearish, and the 15-minute here has been bullish, so this creates a shift here on the 15-minute. And then the 1 minute, you can see my entry back here. You get this price action to the buy side since I am in a sell from an area of discount. So seeing this pullback and now seeing price deliver here to the sell side. So we'll see if price will continue here to the sell side delivering. I've got my stop loss at break even, so I cannot lose this trade. So now it is just a matter of whether or not this trade goes to take profit or if I stop out here at break even. If you'd like to know more, visit us at OnTiltTrading.com. Stay on tilt.